Today's Mad About Money, we're going to be looking at the budget, the good things, the super slugs, the companies affected, the rate cut and the market reaction. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. We've only got 10 minutes and the bell will ring every 2 minutes for us to change topics. So let's get going, Paul. The budget. What did you think?
Oh, I'm just yawning here, Peter. Look, an election budget. I mean, look, the budget deficit, 37.1 billion, up from my EFO forecast of 33.3.
Who cares? But
who cares? Look, you know, with 2019-20, still got a budget deficit. You know, a total government expenditure as a proportion of GDP falls from 25.8% to 25.2% over so many years.
No, I'm snoring.
You are snoring, yeah. I mean, growth a little bit lower next year. I mean, it's an election budget. Some good things for companies, I think. And a lot of super slugs.
I think that's the best thing. Small business got the tax offset, it got a lower company tax rate, and the businesses defined as small business went from 2 million turnover to 10 million. That was certainly good.
A lot of small companies, I mean, not small, you know, with turnover of $10 million, we really like that. We really like the being able to access the instant asset write-off.
Yeah.
So that's really good for some of our retailers. So there's some positives there. It's probably a good for growth, a G for growth, I think.
Will it be good for Turnbull government going to an election?
I think apart from the super slugs, yeah. I mean, there's really nothing else that's not in there, but the super slugs might catch out a few more people than he expects, but they're probably heartland voters.
Okay, we're going to beat the bell and start super slugs because we need more than 2 minutes. So let's go through them quickly. What's bad about it?
Well, you might ask me what's good about it. I start with
bad.
Well, I think first of all, transition retirement pension. Okay, so effectively from 1st of July 2017, the earnings from supporting the assets in a transition retirement pension will now be taxable.
Yep.
They'll be taxed at 15% rather than 0%. The whole reason to have a transition to retirement pension has gone. So I think if you've got one out there, we weren't expecting that. You're going to have to think about what to do with that.
Yeah, the non-concessional cap.
Yeah, first of all, the concessional cap for everyone coming down to $25,000, currently $30,000 or $35,000. That really limits.
That's ripping off people's a chance to build their super up.
Yep. I think the lifetime cap on non-concessional contributions from last night of $500,000. That's going to impact a lot of people that may have been wanting to get money into super.
Yeah.
Remember, Peter, I think it hasn't got a lot of publicity, but that's actually going to go back to looking at your non-concessional contributions since the 1st of July 2007.
Yeah.
So there's no easy way to beat that. And I think finally the last one, which of course is going to, you know, maybe this is fair, but of course the 1.6 million cap on how much money you can have in assets supporting the payment of a pension.
And be taxed at 0.
And be taxed at 0%. You know, that's going to catch a few people out. So lots of slugs there. I mean, there are some good things, but lots of slugs. And I think it's going to impact a few more than the 3 or 4% of people.
Give us one good thing, so sure we're balanced.
Okay, one good thing. I mean, extending the age from 65 to 75. So previously between 65 and 70, up to 75, you had to meet a work test to make a contribution.
Yeah.
No work test, that's all gone, which is good news. And of course, even the self-employed, they can still get a tax deduction up to age 75. That's a real positive.
Yeah.
Some good things for low-income earners. I mean, you know, keeping the low-income super offset going.
That was Labor's, but
Labor's.
Okay, they accept it. It's good, good policy.
Extending the spouse tax offset, which people forgot about, currently maximum of $540 if you make a contribution of $3,000 on behalf of a low-income spouse. Currently a threshold of $10,800, or that's where it cuts out, raising that to $37,000 from the 1st of July 2017. That's pretty good. Yeah. And of course also this way that you can, people that might leave the workforce can access their concessional cap for a period of 5 consecutive years. There's some good things. So there's some positives. But overall, super is going to be one of those things. It's okay for middle income earners. But really, you know, a lot of people that are the better off Australians are going to have to think about, you know, investments outside super.
Where is that damn bell? There it is. Now,
you were waiting for that, weren't you? I thought I didn't want to get that in 2 minutes.
Let's talk about the companies that are going to be affected by this budget, either positively or negatively. I think Jerry Harvey's going to be happy about the small business offset.
Yeah, I think JB Hi-Fi, Harvey Norman, both companies are up over 3.5% yesterday, but I think you'll see a bit of a fill-up there this morning.
Dunstan Group is a car company?
Yes, so there's some good ones, and some of them may have been marked down. There were talks about FBT changes that didn't happen. In the superannuation field, AMP may be a little bit of a question mark because there are a lot of changes here. That might be good for their financial planning business, but may not be good for some of their other business. Challenger should benefit. Now, the reason Challenger should benefit is the government's talked about getting rid of some of the taxation disincentives that stop things like deferred annuities being issued. So I'd say Challenger is a winner. I think some of the listed financial planning companies, there's a few of those around.
IOOF and those sort of companies.
Might win because this is so complex, and there's going to be a lot of people talking to their financial planner. And
I'm hoping that
maybe some of the infrastructure companies as well, but there are going to be some specific winners out there today. I think probably the obvious ones are JB Hi-Fi, Harvey Norman, Challenger.
And I hope some of the people out there will come to Switzer Financial Planning for advice, because there are going to be changes there, and people certainly need help.
One thing we should make clear is most of the super changes don't take effect till the 1st of July 2017, apart from the lifetime cap on non-concessional contributions, and hey presto, that came in last night at 7:30 p.m.
Yeah. Okay, now let's also throw in the fact that we saw a rate cut on a budget day. Unbelievable, and the market reaction was even more unbelievable. What's behind that, Paul?
Well, I think it was partly also, I think you've got to take back yesterday in context. It started off really badly with the ANZ result. As people digested the ANZ result, said this is actually not that too bad. All they're doing is basically saying...
Why wasn't it too bad?
Well, they're saying it's an end to Asia, right? So all the Mike Smith stuff is being undone. They actually were reasonably constrained in their last half in terms of a bit of revenue increase. They worked hard in their cost base. It's the new CEO's come and he's done a whole lot of write-offs, capitalised some software. Cutting the dividend was actually a good thing, because basically what he said also, that he's pretty confident he can keep the 80-cent dividend going this half, 80 cents at least the next half, and 80 cents in 2016-17. He was pretty confident about that.
Yeah.
That's $2.40 on, that's a yield of over 6.5%. People said ANZ it's been the worst performing bank. This is actually not a bad result for the worst performer.
In the day, it was
and it was already up 5% before the budget came up. I think you add then the rate cut, that's got to be good for us, well, at least in terms of yield investment, other banks, Transurban, Telstra, where do you go? I think it was the whole thing. The market's been bearish, and we got that sort of really good news.
If you add a positive budget to a rate cut, it should be good for the Aussie economy going forward.
Look, it should be. I mean, a lower dollar will benefit most of our companies. I mean, we went straight through 5,300 without blinking. Now everyone's talked about resistance here. I'm not sure we're not going to see a bit more retracement first, but we've had a big rally. But then we went down so quickly on almost nothing. So as long as resource prices hold, I think this market can go higher. But I still think they're the key to supporting others.
It'd be a test along the way. We're looking better than we did say in January.
Yeah, we've got NAB's result out on Thursday, Macquarie's on Friday. They're still really important. The other one I think to throw out yesterday, which benefited just from the rate cut, was Woolworths. It was a shocker again, as I said to you last week. And there's no prospect in that. No positive
Still
things
not
there.
time to get into Woolworths.
I don't think it's time to get to Woolworths.
Well, I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.